Hello, happy fall. Hope you're enjoying the amazing weather that Colorado offers this time of year, getting out hiking, biking, enjoying the family, and really just taking advantage of the last remaining little bit of warmth that we have. I'm Michael .shotnik with Sierra Pacific Mortgage, here to help with any mortgage or real estate needs you have. That means buying, selling, financing, whatever it may be. Here to help. Feel free to reach out and would love to chat. Okay, let's dig in. Let's talk through the market. That means rates, stock market, home prices, all around, what's going on right now. And ultimately, as the little chart here shows, we're seeing the most volatility we've seen really since the 1980s. And there's a handful of reasons. The first and foremost is inflation. In the 80s, there was inflation associated with energy costs. That's what we're seeing, as well as coming out of the stimulus, trillions and trillions of dollars dumped into the economy. And these are kind of the effects from that. From September into mid-October here, we've seen rates go from about 6 to 7% as a result of the consumer price index coming in higher than expectations. At this point, the CPI, as well as Fed commentary around that, is the biggest determinant of where the markets are going. That is the bond market, which is very intertwined with mortgage rates, as well as the stock market and the financial markets. In addition, the Fed has come out and indicated that inflation concerns are very, very broad, meaning it's not just energy and food, it's goods and services. That's where there's commentary around further rate increases and really sitting in those increases for a longer period of time, which the markets haven't liked. On the flip side, we're seeing some technicals that are actually kind of working in our favor and look a little promising. Per the chart here, you can see the 10-year treasury, despite all the volatility around it, has held right about 4%. And when thinking in terms of technicals, we're trying to establish a floor of support, but also a ceiling of resistance. And it seems as though the technicals are really honing in on this mark, which is about a 7% interest rate, which of course isn't ideal, but if we can hang there for a little while, get our feet under us, it may create a bit more liquidity in the environment and actually kind of help the real estate market and really just kind of tread water for a little bit. Where the Fed sees us going over the next year, so into 2023, is about a 5% 10-year treasury. So we do anticipate additional hikes there. However, the actual impact on rates is dependent on inflation and really kind of the solution to get on top of the problem. So, a lot of moving parts here, but for now we're kind of in this holding pattern, and let's hope we hang on to it. Okay, so where's the opportunity? There's always opportunity, right? And thinking back to the recession of 2008 to 2010, roughly, housing prices became very, very discounted. I do not think we're going to see that. However, we are going to see some opportunity in housing that hasn't been there for the past couple of years. That doesn't mean, in my opinion, you sell your current home, pull the proceeds into the next home in this current environment. If you were to sell your current home, the timing probably isn't ideal. What I would suggest you do is leverage your current home. So that could be a cash out refinance, a home equity line of credit, tap into that equity and use that to go on and buy your next home. Rents are still good. So if you're in a home that has high equity, a low interest rate, you're in a pretty good position there to leverage that home and turn it into a new home purchase. And that's the path I'd suggest you go down and you kind of get the best of both worlds. You don't sell into a soft market and you buy with opportunity on the other side, just kind of managing the puzzle pieces and really just coordinating the timing of both moves. Additionally, that same approach can be taken to purchase an investment property or a second home. And I think that's where there's a lot of opportunity, especially in Colorado, where with an investment property, you can short-term rent it, you can long-term rent it. There's a lot of different ways to manage cash flow in this environment, and I'd love to chat with you about that. Again, Michael .shotnik with Sierra Pacific Mortgage, here to help with any mortgage, real estate needs that you may have. Have a great rest of your fall here, and I look forward to hearing from you soon.